Greetings, single point partner clients and friends. Rene Jarquin coming from our offices in the Back Bay. It's a beautiful spring day, and just wanted to hit upon some of the key highlights of the market performance since the last time that I spoke to you. The equity markets through the end of March, through the first quarter, are up about 13%. The bond market returned about 3%. So once again, a quarter where it paid off to be overweight to equities relative to fixed income. In addition to that, in April, we've seen a further rally in equities, bringing the year-to-date performance on equities closer to 18%. So a remarkable start to 2019. But clearly coming off of a very difficult fourth quarter where we saw the markets drop almost 20% through Christmas Eve in Q4 of last year. I want to highlight again the importance of staying disciplined through those headline-driven sell-offs, those sentiment-driven sell-offs. Our client portfolios have benefited from staying invested in the markets and from having this overweight to equities, and within equities to having a modest overweight to US stock markets versus Europe, Japan, and emerging markets. So in all, we're very pleased, and we like the way that our portfolios are positioned going into the spring and the summer of 2019. Perhaps at the top of the list of things that I want to address today is this idea of inflation and interest rates. Inflation metrics continue to come in very soft, justifying the Fed's decision to pause from continuing to raise interest rates. That's a very positive tailwind for the market, for the equity markets, and one that we're monitoring very closely. The track record of the Fed in terms of forecasting inflation has not been that strong in the last decade, unfortunately. So we have to play the role of skeptic, and we're obviously paying very close attention to what's happening with wage inflation and whether or not that translates into final inflation, into consumer goods and consumer services, which could force the Fed's hand to raise interest rates later this year. That's not currently baked into kind of the consensus of the market, and it's exactly the reason why we need to be very vigilant of that inflation and interest rate picture. So with that said, again, thank you for the opportunity to work with you and to help you navigate the markets. For now, we stay the course, and I hope you have an enjoyable spring and summer. Thank you.